All right, welcome to this video. I'm actually making videos around liquidity and how you can easily spot liquidities while trading. So someone asked in the comment section, how do you identify trading range as it pertains to structure? How do you identify trading range? So let's just talk about how you can easily identify trading range. Now, a trading range is simply the, how do I put it? A trading range is that valid structural zone that captures liquidity. Is how we know a valid trading range, and led to the massive move to the opposite direction. So to me, that's a valid trading range. We have price taking out inducement, capture this, and then led to a break of structure. So this is my break of structure, So this is a valid trading range for me. So this is my internal range liquidity or inducement or inducement. So this is a valid trading range. Valid trading range. This zone, you can see how it clearly took out liquidity and then led to the push to the upside. So this is my valid trading range. So wherever price chooses to stop here, I know that if price is coming back, price should necessarily come and take out the B leg. So this is my A leg, as I explained in the other video. We have A leg here. This is massive. Okay, I think this is fine. So the B leg is usually the inducement, okay? Then the C leg is the retracement leg. So I'm expecting that anytime price is coming back, my focus will be on the B leg. Price should capture it, and then you want to look at for your formation at this zone. So it might not be the last candle. It might be the last candle as well. It now depends on the time frame, because the last candle on weekly will not be a single candle on daily. It's going to be multiple candles. And a candle on daily will be multiple candles on both 4 hours and 1 hour. All right, so let's just look at GU. Let's see how GU has been playing. Okay, so let's just start from weekly. All right, this is weekly. So this is weekly. Look at how weekly took out this zone, took out all of this. Weekly took out that, structural low that was there. And you can see what price began to do. Price began to, go bullish. So this is a structural zone here. So let's start from here. We're talking of trading range. This is a structural zone. So since this is a structural zone, this is a break in market structure. I've always told those that are in my community, I always tell them that once you have a break in market structure, you want to start looking for that formation. You want to start looking for your entry formation. So now look at our price. The price broke structure from here, came back, and broke above. So we have a clean range here. This is a clean range. Why is it a clean range? We have the A leg here, the B leg, and the C leg. Price came, take out the B leg. So this becomes liquidity sweep. Price swept liquidity. You can see how clearly price took it out and closed above. So this becomes your break of structure to the upside, validating it. That's the first structural break. This is the second structural break, another break of structure to the upside. So if price is coming, I know that this is now my internal range liquidity. This is weekly. It's the same thing because the market is fractal. So this is my A leg. This is my B leg. And above is my C leg. So I'm expecting that if C is coming, C should come and take out B. And that was what price did. Price actually came, took out B. So since price took out B, I'm not going to want to sell from here when price is coming here. No. Because I'm already bullish by this break of structure that is here. This was where the BMS actually started from. Okay. So since we already have this BMS, I've changed my sell bias. Remember, this is weekly. It took so long. Then we have all of this. This becomes a valid zone because price swept liquidity and broke above. Two good zones we are taking out. So what's going on? So we have BMS here, 1. We have another BMS here, 2. Okay. So you want to see what price we do here. Now that price comes here, that's what I explained just now. It might be the last candle. It might be series of candles. It's really not the issue. Now, you know your trading range. The trading range is here, where price captured liquidity and led to this expansion to the upsides. So this is your valid trading range. So when price return back here, you now want to see what 4 hours will give you. What are you looking for on 4 hours? Price should give you that internal range liquidity sweep for entry. So let's see. I would love to mark this place so that let's see what happened here on 4 hours. Okay, that should be it. This is it. Beautiful. So this is my zone on 4 hours. So permit me to take out this so that I love clean chart. So this is my zone on 4 hours. I would want to see on 4 hours, price give me the same formation. What's the same formation? Price gives me this same formation and price come to take out the B leg for us to go up. I want to see that any day. That's the model that we capture or we teach in the community. All right. So price should take that out. Now watch what happened. Price was bearish. Price captured this low. I still want that trading range to be identified. Now price came and gave you all of this break. So the break of structure is now valid. We have a valid break of structure now. So what you want to begin to look for is this ABC pattern. So I can already spot the ABC pattern here. So this is my A leg. This is my B leg. Who is at the gate at this time? And this is my C leg, which is my complete trading range. I have my B leg here, which is my internal range liquidity, which I'm expecting price to come and capture. And then I have my C leg here, which I'm expecting that the move to capture B leg will begin from. So C leg becomes my external range liquidity. Doesn't matter the time, price will come for it. So if price take out internal range liquidity, price goes for external. So necessarily, I'm not going to want to set my entry here, okay, and then stop loss here necessarily. You can do that, you will still be right, okay. You see, you can only get it 1 to 2, 2.8 or something, right? So I want to see when price comes to capture this. That's where I want to now focus on the structure. So my structure is correct now. Complete trading range. So A took out this liquidity sweep. and led to this break. So I'm expecting C to return and capture internal range liquidity. Now that price return back here, this is where the work is. You want to begin to look at what price you do. Price created all of this, swept this, ran up, came back, and came for all of this. So now that price return back, we'll leave all of this. Okay, you'd have been able to then be a 1 to 2 or 3 around here, but now price is back. The same formation. The same formation. That's what you're looking out for. Same formation. Price should come and give you this same formation. Never forget. Okay? So watch what price did. Price created this, ran up, came for this. But before price did this, please, let's follow it like this. This, look at the line chart. A, B, C. That's the chart. This is my A. This is my B. And this is my C, coming to take out B. So this is supposed to be your internal range liquidity, an entry. So you will see how price did it. Look at it. Price came for that week, and look at what price. The price closed clearly above. So that would have been your first entry. Here would have been your entry. Stop loss at this low, maybe with some few pips because of spread, broker issues like that. So that would have been your first move. Now, assuming you didn't get this, because this entry was around 6 p.m. Okay, this entry was around 6 p.m. So possibly you didn't get that. It was not in time, but this was in time. So now that price clearly closed above, same pattern. This is now your A leg. Look at the line chart. You see, that's your A leg. This is your B leg. And this is your C leg. Same pattern, never forget. So price came, created all of this, pushed away, came back. This was a clear liquidity here, internal range liquidity to be taken out. You can see that equal lows. That's the liquidity. So that would have been your entry. Long position on that equal lows. And this was during the New York session. So somebody asked me, how do you know the New York session? This was the New York session. Okay. Price came in, this 14, this is around 2 p.m. Nigerian time. Price came in to that same formation. You always see that formation. Just onto the line chart. Look at it. A, B leg, and C came back for it. That was the entry. Now, where is your target? Your overall target is the C leg that was captured. That should be captured rather. That's the entire C leg. That's a 1 to 6.5. That's very, very fair. So it's the same principle all the time. So see you guys in the next video. Thank you.